What's up, Fruitful investors? In this video, I'll be discussing the rules for investing in the 2021 housing market. Yes, things are changing. Can we still make money? Stay tuned. What's up, guys? So as you might have noticed, if you're really into the housing market and into real estate investing, the market is starting to really change across most of North America. And in my area of Southern Ontario, Canada, things are definitely starting to change. So I'm gonna go over what's going on and how we can still make money, and even if we can still make money. So number one, what I'm seeing is bidding wars, which have been going on for the past 4 years, since 2016, 2017, solid. Houses selling for over market value, way over market value, 30 offers, 40 offers, 50 offers. You probably know all about this. I'm sure if you're in North America, this is also going on in your market. But what's going on right now, I'm filming this at the end of May 2021. I don't know why I couldn't spit that word out there. People are just getting done with bidding wars. That's what I'm noticing. So I'm a realtor specializing with investors. I'm also a very, very active house flipper. Some of the houses our houses we're putting, they're still selling very, very quick, but not nearly as quick as they would have. Instead of 1 day on the market, which is like our normal average timeline to sell a house, now it's about 5 or 7. Is it still pretty fast? Yes, but I'm noticing other houses on the market that aren't as pimped out as ours are. They're sitting for 20, 30, 60 days sometimes. So people are kind of done with bidding wars, especially on the Handyman Specials. That's actually a huge point. So many shitty houses were selling so fast. Everybody wanted a Handyman Special because, I don't know, they were bored, they were watching HGTV, the housing market's awesome, it's time to flip houses. I don't know what the whole hype was, but people loved shitty houses. Right now, at the end of May 2021, what I'm noticing in my local area, when I'm talking to a lot of investors around the country and stuff, is the properties that need a lot of work, they're sitting and sitting and sitting. The houses that are still pimped out, yes, Fruitful style, they're still selling in under a week on average. But that's a really big change going on, and what it stems for is now people don't want to overpay. So it's been a year, 2 years of insane bidding wars, just unfathomable, no data driven, just purely emotional. People will overpay for anything. Now people are starting to listen to the realtors, probably when the realtor's saying, you know what, it's really not worth 700, we should offer 600, and the seller's like, 600, my neighbor just sold for 750 last month. Yeah, well, it's a different market. So that's kind of what we're noticing a lot. And what also is happening is the appeal of home ownership seems like it's wearing off. Which leads to number two, is the pandemic is ending. Pandemic, I can spell it, is ending. In the majority of North America. In the US, I'll just say it, you guys are wicked. COVID is a thing of the past in most of the US. Here in Canada, we're still in lockdown haven when I'm filming this the end of May 2020, so May 2021, so whenever you're watching this. Ontario's a gong show. So, but for most of you, the pandemic is ending, and even here too, people see the end. So people they're over the house thing. During the pandemic, it was all about, I want to live in a nicer house. If I'm gonna be locked down for months and months on end, I might as well live in a nice house. So that's kind of what really drove the housing market to an even more insane level in the past 12 months specifically, was because if I'm gonna be inside all day, all night, every day, I might as well live in a super nice house. So people really wanted to move. People, especially millennials, who lived in like an apartment or a townhouse, they really want to move to a detached house, have their own space, have their own yard. And now that the pandemic's nearing the end of completion, people are thinking about, traveling again, going to see friends, they can go bowling, they can go to nightclubs, whatever, right? So they're starting to get back to normal life. They're starting to be happier as a human being, being able to do things. So the thing of home ownership and I must buy a home, that's kind of fading. I'm thinking that's kind of what I'm noticing going on. So anyway, that was the emotional level of what's going on and what's slowing down kind of the housing market right now. Let's get to the data. So this is the emotional, which is happening. There is real science to this. This is really affecting the actual market. But let's talk about what's most likely data-drivenly actually making it even worse, or just slowing it down even more, and that is rising interest rates. Specifically, you guys in the United States, your rates are already going up. And I'm pretty sure the new government, Joe Biden, said they're gonna be going up even more. They're signaling to the rates will continue to go up because the economy is getting a boost again. People are going back to work. in the United States, you guys have more jobs than people who are jobless. Just people don't want to work anymore because they like free shit. That's a whole nother video. But you guys have an insane amount of jobs. So the economy is really kicking back in the US. So that means it's time for rates to go up. When the economy does well, interest rates go up. Here in Canada, our rates haven't gone up too much because they really can't, because our economy isn't booming yet like you guys are. But Canada government has other tricks in their sleeve. They know they can't raise rates just yet until the economy starts moving, because if they do raise rates, the amount of debt we're in, which is insane, just like almost every country in the world right now, but Canada specifically, oh my God, just printed money out of thin air. We have so much debt that if Canada were to raise rates, they would pay more interest on their own debt. That can't be done. That's not a good thing. So Canada can't raise rates just yet. They're kind of stuck. What they can do is kind of manipulate the rates, if you will, by making it harder for people to qualify. So they have to qualify at higher rates, higher imaginary rates. So we have this thing where, like, right now, I think it's 5.5%. I think that's what it is right now. So if you're a first-time buyer or any buyer and you want to buy $1 million house, you have to qualify as if the rate actually was 5.5%. If you're approved for that, then you can go down to the actual rate, which is more like 2% right now, 2.5%. So the government here in Canada can manipulate things by fakely, if that's even a word, raising the rate. So anyway, that's going on. And they just made that change for June 1st. In Canada here, so that new change comes into even a higher qualification rate. So that's gonna slow the market down as well. Whenever rates go up, real estate prices tend to go down. This is just data. This has happened over history a bunch of times. So when rates go up, why? Mortgages get more expensive. People can't qualify for the $1 million anymore. Now they have to qualify for the $800,000 for the same house, for this, the same thing. So obviously people get pushed down the ladder. They can't qualify for the $800,000 house. Now they gotta buy a $660,000 house, right? So their purchasing power goes less far. So that automatically lowers prices, because when less people start bidding on higher prices, or just less bidding at all because people can't even qualify anymore at all, prices come down. It's just supply and demand. It's just basic economics, but that's what's going on in the market right now. Those are the rules for investing. So to sum it all up, should you stop investing? Is the bubble gonna burst? Is it even possible to invest in real estate when the prices are starting to cool off? Yes, 100%. Yes, prices are cooling off a little bit. Will the growth be, 15% appreciation rate this year like it was last year, and the year before that, and the year before that? No, it might not be 15% again this year. Maybe it'll be 12.5% instead of 15 or 10%. Is that still crazy? Yeah, historically, that's insane. Historically, we're still in an insanely hot market. And if you're investing in an area that has good fundamentals, like I always talk about, job growth, GDP growth, population growth, rental demand, all these things, if you're investing in those areas, it doesn't really matter. Honestly, even if the market does take a shit, which it will, we know a correction is coming. We know it is. We've been on this ride for way too long. But if you're buying long-term real estate in those specific areas that always have population growth, rental demand, there's always jobs being created, who cares, man? I'm telling you, you will be fine. Buy that property at a good price, hold on to it, wait 5 years, sell it. You will almost make money every single time, like 99.9% of the time. But if you're investing in smaller towns, like country towns outside of major cities, and there's no industries going on, we could get away with that 2 years ago and a year ago. You can make a ton of money, because the whole housing market period almost in North America was crazy. That's probably gonna start coming to an end, and especially 2 years from now, can't see that being a good market anymore. So stick to the fundamentals, buy good long-term real estate in good areas, hold on to it for long-term. You can still buy a ton of deals. I'm still buying deals everywhere. And if you're doing flips specifically like I am, you better be getting even better deals than you were getting 4 months ago, 6 months ago, a year ago. You need dirty deals now. And it's taking a while for sellers in the market to realize things are changing. In the next 2 months, 3 months, 4 months, they're definitely gonna realize, hey, this isn't 2019 anymore. Maybe this lowball offer from this flipper isn't that bad. Anyway, I'm starting to rant, but that's kind of the outlook. Flipping, be more careful, get way better deals. If you're doing long-term real estate, long-term rentals, nothing really changes. Just stick to the fundamentals, buy in good areas, you will be fine. All right, guys, that's the video. If you liked it, if you learned anything, smash that like button. Also hit that subscribe button so we can see more of each other. I'll see you in the next video.